Hello, everyone, and welcome back to another exciting, I know it's going to be exciting, it's always exciting, episode of Mortgage Tech Talks. As always, I'm your host, Tom, accompanied by Massimo here. We're trying out this new tool called Riverside FM for the very first time, and I think it's going pretty well so far. What do you think?
Yeah, it honestly, I mean, we did a test run and the test run looks good. So this will be the real run. I guess we'll see how that goes. So
Yeah, yeah, it's actually pretty cool tech. I think instead of Zoom, it records it locally and it's super high quality. I don't know how it all works specifically, but we'll see. We'll see at the end. I'm always a bit apprehensive though, right? I don't know. I'm always the one to use like the old tool. I like using Zoom. I was like, hey, if it's not broken, don't fix it. But it was a bit grainy before, so hopefully this gives a bit better picture quality. I think for you, we were talking about this with our laptops. You're a bit quicker to jump in and use the new tool and break stuff and get at it
yeah, I'm a bit
basically.
of a
Yeah,
tinkerer, sometimes to a
yeah,
fault. But I mean, we heard good things about this tool, and my goodness, it was easy to set up. There was no app or anything that we needed to download. So yeah, fingers crossed. And um, what is this, episode 16? But if episode 16 is delayed
yeah. If it's
or
delayed,
doesn't
that
come
makes
out, blame Riverside. Yeah. So
yeah, it didn't get recorded, or it's super grainy, or it's some weird. I sound like an alien or something like that. Don't don't buy Riverside. But if it's great, hey, this is a shining review for them. So
yeah.
there you go. Yeah. So, anyways, it's starting to feel like spring a bit out there, which is good. It gets my mood up, and I'm gonna be. I think I'm my due date is about 2 weeks away. I'm having my first kid, so it's going to be a big month. March is going to be a huge month. Well, I think,
Yeah.
and when we release this, it'll be like a week away because we have
Yeah,
about a
true.
week delay. Yeah.
Yeah, I'm just realizing, I mean, maybe I'll have to do it on my own for a couple weeks, or we might put it on pause. You're the famous one, so I guess we'll see. But
No,
yeah, it's getting close.
I'll come
Uh,
in. If nothing else, I'll be doing the podcast. The show must go on, right?
yeah, yeah,
Yeah.
yeah, exactly.
Right.
I think it's a big month for a lot of people, like March break, and like you said, I think the clocks switch this weekend, and it's not the fun switch. I think we lose an hour.
Yeah, this is the
Um,
bad switch.
I mean, both of them are stupid, but this one, like daylight savings in general, is getting a bit old, in my opinion. But
Well, it's for
uh,
farmers, and like 95% of us don't farm, right? So it's
yeah,
kind of yeah. I do like it. What's the one? Well, I do like it in fall. It's kind of like you get a bonus hour. But I think the day after the spring one, so it'll be this one, like statistically, it's the most car accidents,
yeah, everyone's
right?
a
It's some
mess.
some stupid. That's what 1 hour sleep does for you, I guess, is it's enough to make the difference more than New Year's Day, which I guess everyone would be hungover for, right? Sleep is more important than nutrition, I guess. Is that the conclusion? Is that right? I don't.
Yeah, I don't know. I mean, someone should do a study on like how many people have harmed themselves or probably died from this daylight saving car crash scenario versus like what is the benefit to farmers like that they
I don't know.
like I don't
Yeah,
get
the
it.
cost benefit is
Yeah.
yeah. Now it's just
Uh,
that it's like built in. There's too
I
much
know.
momentum that it's just it
But I
goes
think
that
some
way.
countries
Yeah,
have gotten rid of it. I
I
think.
think so. Yeah.
Um, anyways,
All
whatever.
right.
But yeah,
Yeah.
this weekend we'll lose an hour, so there you go.
Yeah. On that cheery note, let's get into it here. So
Yeah.
today we're going to be talking about. So I mean, with mortgage tech, especially in Canada, and I think in the States too. There's some big players, right? And the big players are the deal submission platforms, right? So to list them off, it's Filogix, and it's been Filogix for a while. It's Velocity, Finmo, Scarlet, Boss. I don't know if there's a long tail of others. I don't think so. Those are really like between those five, I think it's like 99% of the volume. People might have their own homegrown apps, which is its whole thing, which we'll not get into, but really 99% are those five. So a bit of an oligopoly. I don't know if you call it that. It used to be a monopoly, one kind of big player. Now it's an oligopoly. We'll see what it looks like in the future. I doubt it's going to get much more, but really today I think what we're going to talk about is okay, why are they so big? How are they so big? And it really comes down to their business model, right? How do these work, right? And I don't know if every broker out there knows it. I think a lot do, but we're going to get into the nitty gritty of it, exactly how it works, and what it means for you, right? Why you need to know this and how it's going to affect decisions you make for you and your business. So let's get right into it here. I guess maybe maybe we can start with a bit of a history lesson. I mean, I don't think we're the most qualified to give it, but I mean, there's a lot of history and there's a deep history to this. But let's give the high level, the super high level of, where was the industry, let's call it 10 years ago? That's as far back as we'll go for history. And where is it now? And how do we kind of, what's that journey? What does that look like?
Yeah, I mean, I could take a stab at that. I remember being around 10 years ago working with mortgage brokers, and it was a pretty
That was about the time you started, right? Around
yeah, yeah.
2014, right?
Yeah,
Yeah.
and it was a pretty easy history lesson. I mean, really what was
Yeah.
around at that
Yeah.
time was
Yeah.
Logics. I think there was one other one that was really
It's called
trying.
Morty, I think, or something.
Yeah,
Yeah.
Marlboro Sterling, is that it? Or no?
Yeah,
The
that's related to
Velocity, right?
Velocity. Yeah,
Yeah,
that was a
but I
transaction they
can't
did.
remember if they were
Yeah.
actually a player or trying to be. Basically, it was Logics, and when I say that, it was probably not all of them, but like 98%. Like
I
it
think it
was,
was
yeah,
95, let's call
yeah.
it, right? Yeah.
So, and Logics has a history of being bought and sold, and I think at that time they were owned by Davis and Henderson, D&H,
DNH. Yeah.
which was famous for owning monopolies. They owned Logics. They also owned, or they did like 95% of Canada's checks, like
Was it? Yeah, yeah.
checkbooks and stuff. So that's where they made
Right.
most of their money, and
Yeah, yeah.
the government just hired one place and all the banks. And so long story short, they were the king. And I mean, kudos to them. They innovated in the sense where they built a bridge between a broker and a bank, which you guys probably all know. But that is not easy to do, and it's quite expensive. And they were able
Hmm.
to do it. And I don't know if it was the connections D&H had or what, but they were able to get banks to open up their back door and write code to integrate. And honestly, that's the history. It was just them.
Yeah.
And we'll talk about monopolies and we've talked about why it's been good for innovation, how things have changed. But as you can imagine, it was Logics or the highway or whatever it,
Yeah.
it's them
Highway
or
the highway.
nothing.
Yeah.
And yeah, I mean,
Yeah.
functionally, they were fine. They
Yeah.
were good. Yeah.
Yeah, that's right. I mean, yeah, it was DNH, and then I don't exactly know when the transaction happened. Maybe it was already 2014, but now it's Finastra, and that's who's owned them since. And yeah, so it was about 90, they call it 95% ish. And again, these are round numbers. Don't quote us on this, but 95% ish. And there was maybe 5%. I think it was called Morty, but we maybe should have done the research. Maybe we'll do it, put in the show notes here. But there was a smaller player who had about, let's call it 5 to 10% of the market, and really nothing else. And then what started happening, let's call it, I don't know, 2019, 2020, really when me and you partnered up and really kind of, so Blue Mortgage really kind of entered the space, was new players came in. And so what happened with this Morty, it was actually, you talked about Marble Sterling. Um, Maybe it was that platform. Anyways, names aside, it was combined with a product called Auto, and that's where Velocity came from. And so Velocity kind of entered the scene, started saying, "Hey, I want to do the same." And what was interesting around the same time is that kind of Filogix opened up their back door a little bit, right? And so they said, okay, yes, we're going to connect to the banks, but we're also going to give our pipes. We built all these pipes instead of just piping, these pipes from the banks to our house. We'll actually pipe to other people's house, so other platforms can also connect with the bank, but we're going to charge them to use our pipes. And we're getting a little bit into now the economic model, but long story short is what that allowed is not only Velocity to now connect to many banks, because the thing about Filogix is there's a lot of banks, a lot of lenders, a lot of mix out there, and they have a lot of piping, and they still have the leader in piping, right? They connect to the most. And so now all these other platforms that might have had one or two or 10 pipes, but not the hundreds of Filogix had, suddenly had access to, all these other platforms. Or maybe even if they had zero pipes, they still had access to all these platforms. And so it allowed going from a monopoly into now what is, this oligopoly that we have, right? Which is, yeah, let's call it about 5 people. Still not, maybe what you'd want to see in terms of fragmentation, a huge long list of a ton of players who are fighting tooth and nail, but it's better, right? And it's getting there. So I think that's a little bit of the history, let's call it. But let's get into what we want to talk about today, which is really how these platforms work. Like, what is
Yeah.
the economic model? So maybe we'll do an example. Like, you're a broker. Let's use Filogix still, because I still think it's, a big part of the market. I still think it's majority. And so you do a deal with TD, let's say, for your client. You do a mortgage and you write that deal through Filogix. what does that mean, right? What does that mean for Filogix? And yeah, how do they make money, or do they make money on that sort of transaction?
Yeah. And I mean, I think so we'll go through the numbers, but I think just to put it in layman's terms or context, like all of you guys and gals use Filogix or have probably. It's a free tool. Like,
Right. Yeah, yeah.
like they don't charge you a cent. So, and they've got nice buildings and many staff, so they're making money somewhere. And so the the the
Yeah.
short story is they're making money based on volume from the banks. And we'll talk about how that all works, but there's kind of two parties in the transaction. There is the broker and there is the bank with Filogix in the middle. They make all their money on the bank or from the bank. And so in that example, and this is in the direct connection scenario. So if you are using Filogix to send a deal to TD and it's all going through Filogix, let's say there's $1 million home or $1 million
Yeah.
purchase price, $800,000 mortgage. So you
Yeah,
put
they put
200,000 down.
20% down. Yep.
The Filogix then charges the bank 3 to 5 bips on that deal. So they
Hmm.
might make 320 bucks on that deal, as an example. And you can imagine how many deals happen in Canada. That's just on funded deals. I should know that, but or no.
Yeah, it's just
Yeah,
funded.
yeah, yeah, just
Absolutely, it's
funded.
funded. Yeah, yeah, it's just
Um,
funded. Yeah.
so just think about that. You do an $800,000 mortgage, you probably do 100 of those a year, or maybe 50 of those a year. Every time Filogix is making money on that to give you the platform. It's kind of like if you think about it, the bank's like, thank you, Filogix, for bringing that mortgage to me and streamlining everything. Here's a little cut. That's
Yeah.
kind of how it works. And you can talk about how big the market is and all of that,
Sure.
but um, that's basically how they make money.
Yeah, and I mean to maybe to use the pipes, right? So we're using this analogy of pipes. So we have these different houses, these different platforms, and Filogix is the king of pipes. And really the banks at the end of the day, they're in the business of, let's say it's water going through these pipes or whatever, is getting water into homes, right? Is they want they want water to go. And so that's really what Filogix does, say, hey, I'll connect from you, Mr. Bank, to this house that I have, which allows brokers to do deals, and that's going to allow water to flow. And for that, I guess, distribution that we provide, really, it's a distribution fee. We want a small cut of the deal. And so, really, again, this is something that Filogix kind of pioneered. Um, they kind of set that economic model, and it was a really lucrative model. And they're able to kind of push on the brokers because they were monopoly, their only way to connect. But they're also able to push on the lenders to say, "Hey, Mr. and Mrs. Lender, this is really by far the best way to get in front of these brokers. And so, you're going to want to, compensate me appropriately for that." And and so, yeah, it ended up being a really great model. And really, I mean, the long and the short of it is you say, okay, 320, yeah, that's a lot of money, but it's not a ton of money. Yeah, I mean, it is a lot of money, I think. But if you start to then extrapolate out and say, okay, how big can this market be? It's about 50 million bucks a year, I'd say, more or less. And so, yeah, it's not as big as, what, it's not going to be the next Google, right? Or something. It's not going to be the next Nvidia, which just passed 2 trillion, which is just crazy. Um, so without going there, but that's a big number, 50 million, and very small cogs too, right? Cogs being cost of goods sold. It's just, you're just moving data around, which ultimately isn't that expensive. Really, it's a high capital business in which all the work was laying the pipe, right? Um, but once you have those pipes, they're actually pretty stable. You gotta do maintenance, you gotta make sure it doesn't rust and do things like that. But the pipe's are already in there. And so now it's just moving stuff through, and it actually can be a pretty, yeah, I'd say small cogs business. And so that's what allows, like you said, Finastra and Filogix to have these big buildings and have all these staff and that sort of thing. And, that's why I think companies like Velocity, like Finmo, like Boss, like Scarlet Mortgage out there have been attracted to it because they said, okay, well, it's a pretty big, pretty lucrative, and there can be a lot of money in there. So let's go after that. And I think that's what they've done, and we're seeing that play out. And so that's a little bit, I guess, the technical history, economic model, how that all works. I think the only wrinkle that we'll quickly throw in here is, okay, what happens if I use Filogix's pipes? Or maybe we can talk about it quickly. But I think the cooler thing is also, okay, what does this mean for me as a broker? It's like, okay, I get it, that's kind of cool, but so what? Right? What does this even mean? So maybe real quick, I'll just explain it, which is to say, if you are, let's say now Scarlet Mortgage, and I'm using Filogix as pipes, when we were saying it was around 3 to 5 bips, typically how it works is that if I use your pipes, I get 1 bip, right? So Filogix still gets kind of 2 to 4 of those bips, so they still get a lot of it, but you get one. So there's still some money there. So you still get, maybe 25% of that whole market. And so that at least gave people a foothold too to get into the market and really allows us to have the market that we have today. So that's just a small wrinkle, but I think it's just interesting for people to know. So it's around, I think it's around 1 bip. I don't know. But it's that kind of order of magnitude. Again, don't quote us exactly on these numbers, but the idea is okay, if someone's using someone else's pipes, they're getting about 25 to 50% of that distribution fee from the lender. So let's get into it now, I guess, with that technical stuff out of the way. What does this mean, right? So, okay, kind of cool, kind of interesting, but so what? Why do I even really care so much, and how does that affect my day to day? So, I don't know if you want to take the first stab at this, but I think there's 101 ways it could affect you, but there's a couple big ones. So, yeah, I don't know if you want to take a first swing at it, and then I'll maybe jump in.
Yeah, maybe I'll take the choice piece, or
Mm, sure.
the amount out there. Like until 10 years ago, well, actually no, maybe I don't know when they all started cropping up. Probably 5 to 7 years ago, some
Yeah,
competitors started coming
all of
up, and
that. Yeah,
yeah, now in the last 2 3 years, like there have been some very strong competitors, namely probably Velocity, Finmo, and Boss,
Scarlet Boss. Yeah,
Scarlet. Yeah.
yeah.
So, anyways, long story short, what this means for you is there's options. And maybe Tom will talk about it in a further
Mm,
point, but a lot of these tools are very similar. I mean, at the end of the day, it's a database that needs to take data from your screen and put it in the bank's screen. And the data, the bank, Scotiabank wants the same data whether they use Velocity, whether they use Filogix, whether they use Scarlet. It's an underwriting metric or formula they do. So it's like, I want these 16 fields. I don't give a crap where it comes from. And
yeah. They
so,
don't care.
long story short, you have a lot of power here and a lot of choice, which, in my opinion, and the way we've run our business, is always a value added piece to what we
Hmm.
do and what we think brokers should have. They should have the ability to use Scarlet if they want, or use Velocity, whatever they feel is more advantageous for them. So that's one thing. 10 years ago, it's Filogix or nothing. You're out of business. Now you can actually use many tools, and they all work really well, honestly. Like
Yeah.
there aren't any out there where it's like, ooh, don't touch that one. They're all good now. So
Yeah,
yeah.
they're all yeah, and that's exactly right. There's not like, okay, there's Filogix, which is still like I said, a big player, probably definitely the
Oh yeah,
biggest.
yeah,
Just really given the historical context, but the other four that we just mentioned, it's they're all very, I think, fierce competitors. Um, but I think it's also then introduced a new dynamic. So 10 years ago, everyone used Filogix, you had to. Now you have the choice, and so now what's really interesting, I think, is that these platforms, well, they want you to stay, right? I mean, if
yeah.
switching is so easy, if I can submit a deal to TD through platform A or platform B, maybe I'll do A today and B tomorrow, and I don't care so much. Um, and I think that's good for the broker, but it's not as good for the platform, of course, right? The platform B wants you to do platform B today and platform B tomorrow and the next day and the next day and the next day. So they're doing kind of interesting things with it. And I think the biggest thing that a lot of them do is they provide other value add services, right? So they're doing other things and to kind of hook you, right? To get their claws into you, so to speak. And I think there's pros and cons with that. But just to give the example, a lot of these platforms out there will provide a CRM service, right? So it's something we obviously know a lot about CRM services. But the point is, and some people even do it for free. It's like, wow, free CRM. That's great. That's great. Get a free CRM. And they're happy to do it because if it means that you're going to submit more deals through their platform, they make $300 a deal, then it's an ROI positive activity. So, what it means for you as a broker is you're actually getting a lot of these value add tools kind of at no extra cost. You have now can almost play, I don't want to say play these platforms against each other, but that's kind of how it shakes out in the market is each platform wants to give the best service or provide the best experience for the brokers using it so they continue to come back, even if it's not just for on the deal submission side, maybe there's other value add things, but becoming that one-stop shop where they always go to. And so when it is time to submit a deal, they're already there, they're already hanging out in that platform. It's just a couple of clicks and they're off to the races. So that's maybe the pro of it is you're getting kind of these extra value add services, which is good for the industry ultimately, right? Is more value, more service to the brokers, is absolutely a good thing.
Yeah. And I mean, the just going along that line, like at the end of the day, these companies aren't like SaaS companies per se. Maybe they could be argued that, but they don't want you to churn. They don't want you to leave. And one of the things they're doing, like Tom said, is CRMs or value added features or free things because they understand the economics. The other play they're doing is trying to get exclusive lenders.
Mm,
I mean,
yeah,
if you think about it, like to give you an example in streaming, there's Netflix and Disney and Hulu and Amazon Prime. The only reason people aren't switching these days is because of exclusive shows. And you
yeah.
see that
I
with
want to watch
Netflix.
Friends or
Yeah. Or like some of these, I'm going to mess them up, but Netflix has these exclusive Netflix things that
oh,
they
like they
produce.
produce their own.
Yeah,
Yeah,
yeah.
yeah, that's
And
yeah,
so it's the same thing. It's like I can now, with 2 clicks, cancel Netflix and 2 clicks, start up Disney Plus. But I'm not gonna if they have me hooked on a show that I can't get anywhere else. And so similarly, with 2 clicks, I could leave Velocity and go to Scarlet. But if I have an exclusive lender that gives good rates and only works with Velocity,
yep.
I'm going
That
to think
happened
twice
last
about.
year, right?
Yeah, I think they
Yeah,
had the one that got bought.
HSBC.
Yeah,
Yeah, yeah.
HSBC, and I think M3 did similar with someone.
BMO or
BMO.
I don't know if it's completely exclusive, but yeah, they
Oh,
have
okay, yeah,
they have first. I think the first 6 months with BMO. They also have Nesto. So yeah, a lot of these now platforms are starting to do this. They're trying to get the Friends, right, and the
yeah,
Seinfelds, and that because yeah, you come for Friends and Seinfeld, but you stay because okay, I just wrapped up that episode of Friends, and it's like, what else do you want to watch, right? You're already there. You're already
yeah,
hanging out there, right? And again, I think that's another plus. I'd say the con of all of this too, though, of course, is to say, okay, don't get, I guess, too comfortable, right? Because, maybe you're hanging out on Netflix. This actually happened. There's a real story, so I'll use it. It happened a couple of years ago. Erica loved Friends. Erica's my wife, and Friends was on Netflix, and so we love Netflix. Did it all. We're always watching, always in the background. She's one of these people. She would work and put Friends
yeah,
on in the back. I can't do that, but I think you can.
yeah,
Um, and so she got really comfortable with it. And then uh, I think because it's owned by Fox or it doesn't really
yeah,
matter, but it ended up going over to Crave. And it kind of she kind of lost. She's like, what am I gonna do? And how much is Crave and all this thing? And that's a silly example, but it hopefully illustrates the point to say, yes, you want to take advantage of some of these value add things that you're getting, but you also want to remain flexible too, right? You want to be able to say, hey, if TD all of a sudden goes exclusive, I don't think it will, but hey, I need to be able to be flexible. Or hey, I think the HSBC is a really good example. They offered really good rates. You want to be able to say, hey, I'm using X right now, but now there's this great lender with great rates, and it's only on platform Y over there. I need to be able to quickly switch. So these value add services, they're a double-edged sword, right? They're great, they're value for you, and that's what you want. But you also have to be careful as, how deep are these hooks going, or how deep is this hole that you're digging yourself into? Because you don't know when or how you might want to jump out of it, right? And so to protect your business, you want to be wary of that at least, right? I don't think it means shutting down all these value add services, but it's just understanding, hey, what are the switching costs? What does this mean if? And the big question would be, I guess, if Netflix takes off Friends, how difficult would it be for you to switch over to Crave, right? That's
yeah.
really the question you're going for.
And so just keep this in mind as you get these value added services. There's nothing wrong with them. The word or the it's in the name, value added, right? Like you're getting value out of all this stuff, but just keep in mind why it's there and keep an open mind on that you can switch.
Yeah, maybe just the point we'll leave it to at is where does I guess where do brokerages and networks play with all this? Maybe we can sign off with this because that's maybe another little wrinkle. There's been a couple of wrinkles in this episode, but I think that's another one quickly worth talking about because two of the players that we've talked about, Boss and Velocity, are both associated with big networks. Boss being associated with M3, and Velocity with the DLC group. So, yeah, how do you think about that? I guess. I mean, how does that kind of fit into the conversation, really?
I mean, I think how those large broker networks are seeing this is it's another revenue stream for them. It's a way
Mm,
to keep brokers in their network. It's a way to see more data. They're making a lot of money on it. So I mean, th- anyone who's in that network, and I think that's 60 or 70% of the industry between the two, understand that those networks are incentivized and they're asking you to use those tools. It's I'm sure operationally and there's probably all kinds of benefits, payroll, whatever. It makes it much easier if you use their tools versus Filogix. I don't think there's any lie in
Yeah.
that. That
Yeah,
makes a ton of
payroll
sense.
and back
Yeah,
office tools
yeah.
completely, right? Yeah.
But
Yeah.
also, it's a big money driver for them. Some of them are publicly traded. You can
Hmm.
go look at where they're making their money, and some of these tools are becoming the most profitable tools they have. So that's where they dabble, and they're just basically politely asking frequently to use the tool. So I mean,
Yeah,
yeah,
politely
that's all I'll
asking
say
it,
there.
put it that
Yeah,
way. Yeah,
yeah.
I think that's right. Politely asking. It's a big driver for them, and I think people get it. And I think it's just another factor to think about now. And now in this context, I think it's good for brokers to think about, okay, it's another factor when you're picking maybe the brokerage where you want to hang your license. And for some people, it's a very good thing, right? In that, hey, their deal submission platform is connected to their brokerage, which means payroll and this and that is all a breeze, and that's great. But it also makes it just that much maybe trickier to switch if they eventually wanted to down the road. And so there's no good or bad or right or wrong answer there. I think it's just another little wrinkle as we've talked about in this episode. And so I think the best thing, and really the goal always with our podcast, is just to be educated, to be smart about it, to go in eyes wide open and make the best decision for you and your business and how you like to operate. Maybe that's a good place to leave it. Any final thoughts before we wrap up?
No,
No?
I would say just go in,
Yeah,
always be
yeah,
curious. That's the point of
right.
our
Be curious.
episode.
Yeah,
Like,
yeah,
understand this stuff. And like we said, we weren't just screwing around. Like, they're all good, honestly. So you're
yeah.
not
We
going to
work
be
with all of them.
upset. Yeah.
Yeah,
I mean, honestly, if they weren't good, they were either bought or they're dead by now. So,
yeah.
I mean, the all the good ones are left. They're all doing the same thing in different ways. And yeah, keep
Just what
going.
makes the most sense for you. Yeah.
Yeah.
So with that, thank you again for everyone listening. We appreciate the time and attention. If you do have comments or questions, please leave it in the comment section below. And have we had a comment yet, Matt? I don't know if I always sign off
I
that
should
way, but
check. I just
I
listened
don't
to the
think so.
episode. I don't even look, but I
Ah,
should probably start looking.
oh man. Okay, well we put it on. We're starting to put it on YouTube. So for those YouTube listeners out there, we'll check YouTube this week and love to see a comment there. Shout out, maybe we'll give you a guest spot if you're the first commenter. I don't know if that's a good thing or a bad thing if people like that, but
There
and
will be
no
a vetting
promises. But
process on the first comment too.
oh no,
Okay.
yeah, I know we're gonna have to vet it. Anyways, all right. Well, thanks again, everyone listening, and have a great week.
Yeah.